What is flex industrial space? Have you ever heard the phrase flex industrial when it comes to commercial real estate investment and wondered what that really meant? Well, let's break it down why tenants and investors love this property category. What if you could combine office, industrial, warehouse, and retail all into one space? Well, this is the magic of flex industrial real estate space. If you're investing in commercial real estate, flex industrial is one of the most versatile categories of real estate investments. This type of property is one of the highest in demand and one you're going to want to know about. By the end of this video, you're going to understand what flex industrial space is, who uses it, and why it is one of the best asset classes in commercial real estate to invest in right now. What is flex industrial real estate? Well, it's just a shortened version of flexible industrial real estate properties. And this is synonymous when you hear small bay, contractor bay units, these light industrial, small industrial. These are flex industrial spaces. And what it is, it's a combination of showroom space, office space, warehouse space, light manufacturing, and sometimes even some retail. And this type of property is designed so it's easily reconfigured for the tenant's use. Think warehouse in the back, showroom or office in the front. So what makes flex industrial so flexible? You can easily configure the layout. So 10% of the property up to 70% could be office, and then the remainder is warehouse. There's modular walls and open floor plans, so you can easily put in an additional office or bathroom or mezzanine space with additional storage above the office. There's roll-up doors, so you can easily get a truck or equipment in and out of the building. These types of properties support logistics, R&D, e-commerce, creative companies, trades, home service companies. This category or asset class, it has the highest demand for commercial real estate users. The reason being is you get the benefits of an office property, but you get additional warehouse and it's at a fraction of the cost. Or you get the benefits of a retail showroom, yet you have the office and the warehouse space in addition to the retail. So owners and users are looking for more flexible options to operate their business out of. And it's typically more flexible or it's more affordable than it would be to lease a traditional type of real estate asset category like office, industrial, or retail. So who are the tenants or owners that are using these flex spaces? Well, there's a wide variety of types of customers or tenants or owners. We have e-commerce companies, local contractors, local home service providers, tech startups, light R&D or shipping companies, showroom users such as furniture or auto accessories. 4 years ago, I built a flex space in southern New Hampshire where I'm originally from, and we have tenants ranging from auto detail guys, R&D for a gun manufacturer. We have mom and pop owners that just like to store their cars there and have a man cave hangout. We have a gypsum company, and we have painters and handymen that store their supplies in our units. I love this category because it gives the best of both worlds. It gives the warehouse space where you need to store your materials, work on any of the equipment that you have, and at the same time, a forward-facing retail showroom or office space that you can meet customers and still have nice curb appeal for someone that wants to come in and know that you have a strong business. Why do investors like flex space and why are they investing in it so heavily? Well, I'm one of these investors. I own Patriot Holdings, which has a series of investment funds, and small bay industrial has been a focus for us to continue to acquire. Here are the 5 reasons why I love small bay industrial as the next hot category for commercial real estate investing. Number 1, high tenant demand in suburban and infill markets. Number 2, adaptable for different uses. So we can have all types of tenants, which reduces or lowers vacancy. Number 3, often leased for higher rental rates than traditional large warehouse. Because it's a smaller space, you can get higher rent per square foot. Number 4, it's attractive to small and mid-sized businesses that provide useful services to the community. Home services that aren't going away. HVAC, siding, paint, roofing. All of these businesses are valuable and they are not going to be outsourced overseas. So it gives us as investors a diversified stream of income where one tenant cannot leave and reduce the entire cash flow of the property. Number 5, less capital intensive than large warehouses. Just think of it like this. Flex equals function, which equals adaptability, which equals cash flow. Let's get into the nuances of commercial real estate. So flex space technically is a little different than small bay contractor units or small bay warehousing. So flex has typically more office, between 20% and 70%, where it could be office, showroom, built out space with bathrooms. This is where people are working day in, day out in an office or retail looking environment. These are going to be tenants that have more of a customer driven business or research and development driven business versus the small bay industrial, which is going to be primarily contractors and small warehousing. You're going to have light manufacturing or working on equipment or storing materials in small bay industrial, plus typically a little bit less customers coming in and out of the business. So how does that change the property build outs? Well, anywhere between 5 and 25% would be office for small bay or small contractor bays versus flex could be 20 to 70% office build outs or showroom build outs. Flex space, you're going to get a higher rent because of the build outs, and you probably get higher credit tenants, but yet they could have newer businesses and not as stable. But small bay industrial, you're going to get a lot of established businesses, people that are in the home services or in the manufacturing, light manufacturing industries for years. And you're going to get less rents. They're going to be more cost conscious, where the flex is going to have a lot higher rents, but a lot higher cost to build out that space. The nice thing about small contractor bays is those tenants don't expect a lot of build outs. They want a warehouse where they have roll up doors. They can get easily in and out. They have an office space and they have bathroom. And that's about what they get in that area. Flex space, they're going to want to have a nicer showroom, a nicer office in the front, and less access to roll up doors in the front of the property and probably warehouse just put in the back. The nice thing is flex does fit the needs of modern businesses. Now more than ever, small businesses don't need that visibility right off Main Street. So this fits the need of affordable rents and yet still a flexible use that they can operate their business out of and have a nice storefront, but still do not need the high visibility and don't want to pay the high retail prices. Here are some of the key things to know before you start investing in flex industrial space. Location matters. Being near a highway, being near housing in commercial zones is important. Second, zoning must allow for this mixed use. It's a unique use, so confirm that zoning is approved for this type of asset. Tenant improvements can drive the value up by increasing rents, but it also increases your cost to re-tenant a space or buy this type of property. Number 4, you want to look for buildings with clear heights of 14 to 20 feet, meaning the garage or the warehouse door that you're using is at least 12 to 14 feet high. And once you're inside the building, the roof or the ceiling line is at least 14 to 20 feet high. That opens up your availability to the types of tenants that want to occupy it. Make sure there's insulation and modern HVAC. Some of the older properties are not heated or cooled well, and this is going to diminish your tenant pool. You're going to want to look at the tenant mix and see what the occupancy is clearly, but also the length of stay on the tenants. Do you have a lot of long-term tenants that continue to release the property year over year? Or is there long-term fixed leases that do not allow you to raise the rents? Very important to understand, if you can raise rents, you can raise the value of the property. And with inflation increasing rental amounts, the shorter-term lease, in my eyes, is more advantageous. Yet having a lot of long-term leases, or at least a few long-term leases, creates stability for the property, but it limits the amount of upside in rental increases. So now that you know all about flex industrial space, check out this next video about small bay industrial units. Very similar to flex, but some nuances that you're going to want to know if you're interested in investing or acquiring or occupying a small bay contractor unit. Check out this next video.